welcome, and I will be doing exercises 23, 24, and 25 from the Horngren's Accounting, the managerial chapters, and this is chapter 2. Okay, so the first one is completing and selling jobs. June production generated the following activity in Rennick Chassis. Work in process inventory account. The June 1st balance was 20,000. Direct materials used was 31,000. Direct labor was 33,000, and manufacturing overhead allocated to jobs was 13,000. Additionally, Riddick Chassis Company had completed jobs 142 and 143 with total costs of 38,000 and 36,000 respectively. So we want to prepare the production entry for the journal entry for the production that was completed in June. Okay, so the journal entry for what was completed in June 23A, 23 part 1, would be so we're going to put it into finished goods inventory, and that will be 38,000. And we take it out of work in process, 38,000, and that would be for job 142 completed. All right, and then the other one is the finished goods inventory for 36,000 and work in process inventory. I forgot the inventory up here for 36,000. So remembering that inventories are assets are increased on the debit side, decreased on the credit side, and that would be job 143 completed. Okay, so that's part 1. Then part 2 says open a T account for work in process, enter the entering balance, post the journal entry, compute the ending balance in work in process inventory. Okay, so number 2 then, part 2, we're going to create a T account. And this is going to be the work in process inventory. And we're going to start with our beginning balance of 20,000. To that, we added the 31,000 direct materials. We added 33,000 direct labor. And the manufacturing that was allocated was 13,000. Manufacturing overhead was 13,000. Then we transferred out the jobs, job 142 and 143, which was 38,000 and 36,000 respectively. So that's going to be 74,000 on the credit side. And let me add this up real quick. 5, 8, 9, 97,000 on the debit side and 74,000 on the credit side. Would give us a balance of 24,000, and that will be our ending work in process inventory. All right, so part 3, it says prepare the journal entry to record the sale on account of job 143 for $46,000. Okay, so part 3, we're going to have the journal entry of, we're going to have accounts receivable. And that was for what amount?
46,000. And we're going to have sales revenue for 46,000. But we're also going to have the cost of goods sold.
And this is job 143, and 143
was 36,000. And we're going to take that out of finished goods inventory for 36,000.
Okay. And then part 4,
What is the gross profit? Well, the gross profit is just the sales revenue minus the cost of goods sold. Minus the 36,000 gives us 10,000.
gross profit.
All right, let's go on to
Problem 20 or exercise 24. Here we have Montel Foundry uses a predetermined overhead allocation rate to allocate overhead to individual jobs based on the machine hours required. At the beginning of 2025, the company expected to incur the following: manufacturing overhead cost $840,000, machine hours of 70,000. And then at the end of 2025, the company had actually incurred these costs: direct labor costs, $1,160,000, depreciation and manufacturing plant and equipment, $740,000, property taxes on plant, $40,000, sales salaries, $26,500, delivery drivers' wages, $23,500, plant janitors' wages, $17,000, and machine hours were 67,000 hours. So requirement number one is compute Montel Factory's predetermined overhead allocation rate. So remember, this is when I was talking in class the other day. This is where you have a problem and you have the predetermined information, and then you have the actual information. And what's natural to go through your head is, why would I use the predetermined or the budgeted information if I have the actual information? And the answer is, well, because this is a problem, and so I have to give you all this stuff to work it out. But in reality, in the real world, you're going to be making these decisions in January, February, March, and you won't know what the actual is until December. And so you have to pretend as if you don't know the actual at the beginning of this problem. So our expected anticipated manufacturing overhead is 840,000, and our anticipated machine hours is 70,000. And if we divide that out, we should get $12 per hour. So that's our predetermined overhead rate, number one. Part 2, it says prepare the journal entry to allocate the manufacturing overhead. Okay, so before we do the journal entry, let's figure it out. We've got an actual 67,000 hours times $12 an hour. And so that's going to be 804,000. Okay, so now our journal entry is going to be work in process inventory for 804,000, and we're going to have manufacturing overhead control for 804,000. Excuse me. So that's our journal entry. That's part 2. Part 3 then says post the manufacturing overhead transactions to the manufacturing overhead key account. Is manufacturing overhead under or over allocated?
Okay. So part 3, we do this T account that we're going to call manufacturing overhead control. And we already know that we just posted the 804,000 to the credit side. That's the allocated overhead. And the actual allocated overhead we put on the debit side. And so we go down there, we go through the actual now, and direct labor cost is not an overhead, so we can ignore that for now. Depreciation on manufacturing plant and equipment. That's certainly overhead because it's manufacturing plant and equipment. And that's 740,000. Property taxes on the plant. Since it's on the plant, we include it. That's 40,000. Sales salaries. Sales salaries is not a manufacturing overhead. That's a selling cost. So we ignore that. Same is true with delivery drivers' wages, so we can ignore that. Then we have the plant janitor wages. So that certainly counts. 17,000. We need somebody to clean up the factory. And then the machine hours is how we allocated. So now we need to add these up. We've got 797 here and 104 or 804. So we are 7,000 over allocated on this. So remember, on the left side is actual. The debit side is actual. The credit side is allocated. And so when we have a bigger allocated, we are over allocated on that. And then part 4 asks us to make the journal entry to adjust for the under or over allocated amount. So what we have to do is we have to get this back to 0, which means we need a 7,000 on this side. So it's going to be manufacturing overhead control, a debit of 7,000, and then we need a credit to cost of goods sold is 7,000. Now remember, cost of goods sold is an expense account, and so when I credit an expense account, I'm lowering the expense, which means I'm increasing income. So it's a decrease to cost of goods sold is the answer on that one. Okay, let's move on to problem or exercise number 25. And here we're going to have allocating and adjusting manufacturing overhead. And in this problem, the manufacturing records of Speedy Kayaks at the end of 2025 fiscal year show the following information about manufacturing overhead. Overhead allocated to production was $405,900. Actual manufacturing overhead cost was $428,000. So this time we are under allocated, right? We don't have as much allocation as we have actual. The predetermined overhead rate is $41 per machine hour. So the first requirement is how many machine hours did Speedy Kayaks use in 2025? So the way we get that, we start with the amount of allocated overhead, which was $405,900, and we simply divide that by the $41 per machine hour. And so that tells us we had 9,900 machine hours actually used during the period. Then number two, which we've actually already answered, was the manufacturing overhead over allocated or under allocated. Well, the allocated was 405,000. The actual was 428,000. So we are under allocated. Sometimes people will call that under applied, under allocated, under applied, same thing. And then part three asks us to prepare the journal entry to adjust for the under or over allocated manufacturing overhead. So if we were to look at a T account right now, remember actual is on the debit side, and that is 428,000. And the allocated is on the credit side, and that is 405,900. So our balance currently is 22,100. Now, again, we have to get this back to zero. So our journal entry is going to be cost of goods sold, 22,100. Remember, cost of goods sold is a expense account, so we're debiting that. That's going to be an increase. And then we're going to have manufacturing overhead control for 22,100. And that gives us a zero balance at that point. Okay, so we've increased our expenses, we've lowered our income from what we thought we had. All right, so the final exercise on this video is going to be 26, and that's a series of journal entries. Okay, so journalize the following transactions for Colby's sofas. Explanations are not required. So A, we incurred and paid website expenses for $29,000. Or $2,900, I'm sorry. Okay, remember expenses are a debit, and so we're going to debit website expenses, and since it says we paid them, we're going to say cash, $2,900. The second one, B, is we incurred manufacturing wages of $15,000. 60% of which was direct labor, and 40% of which was indirect labor. Okay, so 60% of 15,000 is 9,000. So we're going to have work in process inventory, direct labor is going to be 9,000. We're going to have manufacturing overhead control for indirect labor will be 6,000, and then we'll have wages payable for 15,000 on that. Okay. Now, letter C, we purchased raw materials on account for $24,000. So that'll be raw materials inventory, 24,000, and accounts payable, 24,000. Next up, we used in production direct materials of 9,500 and indirect materials
of 4,500.
So we're going to have work in process inventory, direct materials, 9,500, and manufacturing overhead control, indirect materials, and that was 4,500. And we're going to take those both out of raw materials inventory for 14,000. E, we recorded manufacturing overhead depreciation on the plant, 10,000. Plant insurance previously paid was 1,300. Plant property tax 4,200. And it says to credit property tax payable. Okay, so for E, we're going to start with the depreciation, and that will be manufacturing overhead control, 10,000. Then we're going to have, and we're going to put that into accumulated depreciation for 10,000. The next one is we had plant insurance, so that's going to be manufacturing overhead control, and that's 1,300. And that's going to come out of prepaid insurance since we paid it in advance. And then finally, we have the property tax, and they tell us to credit property tax payable. So we've got property tax expense, or I'm sorry, manufacturing overhead control for 4,200, and we're going to put that into property tax payable, 4,200. Okay, so now we come down to G. We completed on production on jobs with costs of $3,800. So we're going to move that into finished goods inventory, 38,000, excuse me. And we'll take it out of work in process inventory, 38,000. Then H, we sold inventory on account for 20,000 with a cost of goods sold of 10,000. So it's account. So we're going to have accounts receivable, 20,000. Sales revenue, 20,000. We are going to also have cost of goods sold for 10,000, and we'll take it out of finished goods inventory for 10,000. And then we adjusted for under or over allocated overhead, and we are told on the side that we are under allocated by $35,000. If we are under allocated, that means we have to add to the manufacturing overhead control on the credit side to get to zero. So that's going to be cost of goods sold for 3,500 and manufacturing overhead control, 3,500. All right. As always, if you have any questions, don't hesitate to contact me, and I'll be happy to go over anything with you.